Happy Monday, everyone. This is Lily with Ohana team at Florida Home Realty and Mortgage. We are currently facing very difficult time in America and around the world. COVID-19 has really impacted our country and our economy. So today I have Jeffrey Weller, CEO of Coast2Coast Mortgage. We will be discussing about the state of the lending market and also how COVID-19 has really impacted real estate and mortgages. So with that said, give me a second to introduce Jeff. Jeff is my preferred lender for many years. Jeff has been in the mortgage business for over 20 years and is very knowledgeable about the lending market. Jeff is also a published author of a book on mortgages. So here's Jeff's book. He actually wrote the book himself. With all that said, let me welcome Jeff. Thank you, Jeff, for joining us today.
Thank you for having me.
Jeff, please share with us what is the state of the lending market today?
Well, right now, as you know, the mortgage market is very volatile. We know that the stock market and everything in the financial system has been up and down and crazy and dropping tremendously. Right. And, there's a lot of volatility. There was a huge drop in mortgage rates, which led to a huge volume of people refinancing. And then we ran into capacity issues where the lenders had too many loans and couldn't get them all closed. Right. And then the coronavirus hit all at the same time and reduced productivity. So appraisers are taking 15 days, in some cases longer, to get an appraisal turned in. And title companies are having trouble closing loans because the recording departments at the courthouses are closed. So it's kind of like a chaos in the lending industry, but it's a somewhat organized chaos. We've kind of come to grips with it, gotten it figured out how to make it work. And now the only downsides that I'm seeing currently is that we're seeing some programs that are going away. Some of the limited documentation loan programs are disappearing from the market. As well as some of the jumbo loan programs are disappearing from the market. Right. So some of the buyers are needing more larger down payments or at the bare minimum higher credit scores to qualify. But we still have the first time home buyer programs, 3% down and some different programs that are low down payment for the buyers.
Okay, great. Thank you so much. I'm sure over the past few weeks, you probably received a lot of phone calls on the low interest rate. And I know that interest rate fluctuated a little bit last week. Can you give us information on what's going on with the interest rate right now?
Yes. So when interest rates, they pretty much hit an all-time low just a few weeks ago. And once that happened, so many applications were taken, it kind of slowed down the lending industry and rates went up. And a knee-jerk reaction at the same time the virus hit. So, that's what caused a lot of fluctuations. And what we're seeing now is you can still get a fantastic interest rate. I mean, better than last year in most cases. Wow. But what we're noticing is it depends upon the time you call. So you can talk to a loan officer at 10 o'clock in the morning, have one low rate here, and then at 3 o'clock you call back and now the rate's up here.
Wow.
Tomorrow morning, the rate might be back down here again. So it all depends upon when you call. My recommendation is to have a good mortgage broker that can shop your loan with many lenders. And that way they can find the right loan for you and the right rate for you.
Good. Thank you so much for that information. I know there's talk about lenders raising the minimum credit score requirement in order to pre-qualify for a mortgage loan. Can you give us some insight on that?
Yes. So some of the lenders have kind of tightened up their lending standards. Okay. When a loan is closed by let's say a mortgage company, the loan is sold on the secondary market to an investor. And basically right now, those investors that are buying those loans are saying, hey, we're not real excited to be buying these loans because of what's going on with forbearance plans and such. So the ones they're buying, they want to have higher credit scores. Typically, the loans that have the highest chance or highest rate of a default are 635 credit scores and below. Wow. So a lot of lenders have tightened up and made their credit score 640 or above. So we do have, as mortgage brokers, we have many options. And so we may be able to find you an option that if you just went to your credit union or your bank, that they wouldn't have. I know a local credit union here in Jacksonville recently made 660 their minimum credit score for any loan you want, wow. 660 minimum. And then they completely shut down refinances, no more refinances. Wow. So that has kind of changed in the market.
Yes.
But on that note, if you call a good mortgage broker, we can shop with many lenders. Like our company has over 100 lenders to shop your loan with. So if 50 of them say, hey, 640 is a minimum credit score, there's going to be a few others that'll say, hey, we'll do a 620 or we'll do a 600. We'll do something different. So that is a possibility. One last thing is that anybody who owns a home currently really needs to take this time to consider a refinance. And if they refinance, they can do one of two things. Mm-hmm. They can potentially lower their mortgage rate that they have now to save a monthly payment. Or number two, and this is something that we all should consider, preparing for what happens if I get laid off of work or they let me go or they cut my hours. You could consolidate your bills. So if you've got equity in your home, and lenders will typically lend up to 80% of the value of your home. In some cases, we can go higher than that. Then what we can do is we can do a refinance and consolidate high interest bills or bills that have high monthly payments, put it all into your mortgage. So therefore your entire payment obligation of all of your bills goes down.
That's great. Great information. On the topic of forbearance, can you give us information on what the forbearance package is about?
Yes. So the $2 trillion stimulus plan that was just signed by our president, it allows for any homeowner who currently is living in their primary residence to have a no questions asked 6-month forbearance, meaning they don't have to make payments on their mortgage for 6 months.
Okay.
That sounds great.
Yes.
And it is great for people who have had misfortune. Maybe they've gotten sick, maybe they've lost their job, right. Maybe they've taken a pay cut, or their spouse lost their job or something of that nature. They're taking care of a sick relative. So that program is great for those individuals because it gives them an option besides losing their home. However, anybody who doesn't really need the forbearance program really needs to look into what it is all about. So the forbearance plan is 6 months, no payments, no questions asked by your mortgage servicer, but you have to call them to set it up. You can extend it an additional 6 months. We don't know what the criteria is on that yet, but it is written into the bill, into the law. So when you call into your servicer, you want to ask them a few questions. And one of the things we've learned from the 2008 financial crisis was that if you don't ask questions, it's going to get you into trouble.
Right.
In 2008, a lot of people were told they should do a loan modification. And so they would stop making payments, which I always I'd recommend discourage not to skip your mortgage payments.
Right.
But in that case, they were told not to make mortgage payments and that we will modify your loan. And so what happened is when that happened, people were not told it was going to destroy their credit.
Wow.
And then people would miss payments, and then all of a sudden their modification would be turned down and a foreclosure would be started. So this is a little different because this is government saying you have 6 months of no payments, but you do need to talk to whoever you write your check to your mortgage to, call your customer service department, ask them, what are the ramifications of doing this?
Got it.
How is this going to be paid back? Right. Are they simply going to add 6 months on to the end of my 30-year loan and I just make 6 extra payments? Right. Or are they going to demand on the 7th month that I make all 6 previous payments that were skipped all at one time?
Got it.
So those are different questions we need to ask our servicers, and there is no set rule on how it has to be handled. So every servicer, every company that has your loan, that individual company you write your check to, those are the ones you need to ask that question of.
Great. That's really great information, Jeff. Another question is, if I had clients who were pre-qualified 2 months ago and they're still in process of looking for a home, is the pre-qualification letter that they received 2 months ago still valid as far as interest rate and the terms that they were given?
Great question. The answer to that is that you really need to speak to your loan originator, your loan officer, to confirm that your pre-approval or your pre-qualification is still good. Some people who may have had a reduction of income, I know people have had 20% cuts in pay, or some people are reduced from 5 days of work a week to 3.
Right.
Those different things can have an impact on your pre-approval. The interest rates might have been lower when you got pre-approved, or they might have been higher when you got pre-approved. So
Right.
that has to be determined as well when you do your pre-approval. And plus, after about 60 days, 90 days, that's when credit reports start to expire, and your loan officer needs to pull a new one to make sure that your credit is in the same standing it was or better. But definitely reach out to, in my opinion, I want you to recommend you speak to a licensed mortgage broker, because they're going to have a lot more options than just going with an individual lender that has one set of programs. A mortgage broker is going to give you a full analysis of everything and help direct you to the right program and the right loan.
Great. Thank you so much. Thank you so much, Jeff, for sharing your knowledge and your expertise on the lending market. Thank you, everyone, for joining us today. If you have any additional questions, please comment down below. Have a great week, and please be safe and stay healthy out there, everyone. Aloha.
Thank you. Aloha.